Hi everyone, it's Alex King here at Cestrian Capital Research. Welcome to our live webinar. It's currently Wednesday, the 24th of May. It's 5 p.m. Eastern for the benefit of the tape, and we are delighted today to have very special guests, Peter Platzer and Ben Hackman from Spire Global. Peter is the founder and the CEO of Spire. Ben runs investor relations for the company, and we're going to have them with us to talk live about the company, what it's doing and its prospects insofar as they can tell us within the bounds of securities laws. As always, we'll run these things on a live and open mic basis, so if you have questions, do feel free to shout, unmute yourself and shout. We took the trouble to collate a bunch of questions from around our subscriber groups, which I'll take Peter and Ben through. But if you have points to make, then feel free to butt in. We'll also have a Q&A session at the end for anyone that wants to do that. We'll circulate the webinar as a video too, and you can always follow up with written questions on that. I'm going to just do our general disclaimer in a moment, then walk on to tell you just a little bit about Spire, and I'm going to hand over to Peter, the Chief Exec, who's going to present. First of all, our disclaimer, it's on your screen right now. So disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in this webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in this webinar is intended to be investment advice, nor should it be relied upon to make investment decisions. Cestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrian Capital Research. Cestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so before we hand over, so just to refresh, Spire Global, this is one of the crop of new space businesses. Spire is a small cap by market capitalization. It's worth around $100 million equity value, but the company is in really good shape fundamentally. So for the quarter just recorded, the March quarter, the company turned in trading 12-month revenue of just shy of $90 million. It is currently EBITDA and cash flow negative, but the gap to profitability is closing rapidly. So on a trading 12-month basis, the company at the end of 2021 was 110% negative trading 12-month EBITDA margin. A year later, minus 49%, and this quarter minus 40%. So it's on a good track to EBITDA profitability. Cash flow, similar story. Cash flow margins at the end of 2021 were negative 151% on an unlevered pre-tax free cash flow basis. A year later, negative 71, so a halving of the negativity, and then in the quarter just recorded negative 56. So this is a standard and classic path for a young company to keep growing fast and narrow the gap towards break even and eventually turn into cash profitability. I own Spire Global personally. It's been a mixed experience so far. On the one hand, the SPAC warrants were a big success. There was a value squeeze on them, which was a big win. Personally, and also for any of our subscribers and our services that took advantage of that. And the stock has been frustrating so far, but it's a long-term hold for me, and I have grand expectations of its future. Now, with that, I'm going to hand over to Peter. Peter's going to present to us all. I'm just going to make him a presenter right here. There we go. Let's see if this works. And there we go. So, Peter, thanks so much for coming to talk to us.
Alex, it's a great pleasure to be here and talk with you and your audience about Spire, a space SaaS company. I would say, yes, we leverage space, but at the end of the day, what we do is we sell our data and services as a subscription. And just like our customers, we are really focused on the future of planet Earth and leveraging our products to increase the quality of life all across the planet. I have to share, a similarly long disclaimer. I will not read to every single element of it. It is part of all of our presentations as a U.S. publicly listed company, and has to do in particular with any forward-looking statement which may or might not happen during this presentation. So I want you to be fully aware of that. I assume that many of you are, if you're on this call, very familiar with Spire. But if you're not, I'll give you like a very, very quick overview of the company. The company has a fully deployed constellation on orbit, doesn't intend to grow it, it just intends to mine that constellation, collecting data. We use a particular modality, namely radio frequencies, to listen to activities on or around planet Earth. Many of you have heard of looking companies that use cameras to capture sunlight in good weather, or about talking satellites that transport data from one spot to the other, you know, like internet or phone calls or the like. And then Spire is a company, and as far as we know, the largest company in the listening segment of satellites, which use radio frequencies to observe what is happening on or around Earth. Spire tracks everything on the oceans, you know, all of the world's ships, in the air, all of the world's planes, and in the atmosphere, all of the world's weather. And then we also have a highly relevant business, which allows our customers to rent infrastructure from us, just like they can rent at Amazon AWS and get access to space through a simple API. So we have customers that were using space to serve their customers through an API, leveraging Spire services in just a matter of weeks. Here, you know, I don't know if you saw the release that came out this morning about our partnership with Black Sky. One of the latest big pushes of Spire, for obvious reasons, is to contribute positively to global security and help, you know, it's like the right guys make the world a safer and better place. And that is a partnership that we did there. Here's a customer use case. The Financial Times used our data to expose how a particular country secretly stole grain and tried to ferret it away. And that article, I think, was very well received and shone a light on some dark activities that in the past were impossible to follow, because you didn't have satellite constellation. And that is kind of like a very unique feature of Spire as well, is that all of our data, all of that we do, is only accessible from a satellite constellation of our kind. So you can't do it with a single satellite, you can't do it with any terrestrial means, and that gives us a very substantial competitive moat. Again, I'm going to dive in more about, like, you know, the latest things. There is a ir.spire.com webpage where you can find historical information from us, presentation that we have given at investor conferences, as well as all of our findings. But for those of you who know Spire and know this, you know, inside and out, maybe some of you might even know it better than me. It might be a nice little bingo that we could play. More focusing on like, you know, like the last result, the Q1 results. We're very, very proud of the Q1 results. It was our 7th quarter as a public company. It was our 7th quarter in a row of increasing revenue. It was our 7th quarter in a row of improving the overall profitability picture of the company. We had a 34% year-over-year growth on the revenue side. We improved the operating loss by 28 percentage points year-over-year. The operating margin 51 percentage points, and, you know, again, we had our best EBITDA margin. We added almost 50 new ARR, so annually recurring revenue customers to us. That is the land portion of Spire strategy. We land those customers and then we expand from those customers. That strategy has been working really, really well. At the end of last year, we had a 12-month rolling annual net retention rate of 116%, which means that customers not just stay with us, but on average they buy substantially more from us in the next year when they renew. And then a last point, but certainly not least, something that we've talked about now for substantially over a year, is our very firm target for positive free cash flow, which is now 10 to 16 months away from the end of the first quarter. So a very, very strong quarter, executed and exceeded many items on the top line, guidance as well as consensus, as well as on the bottom line. Added a very nice chunk of additional customers to our customer base from which we can now expand, and of course kept our 2023 guidance. I think that's the first quarter. I think the other thing.
Peter, sorry, Sanders, can I interrupt? We can't see slides turning here. Are you flipping them at your end?
I have flipped them on my end.
Okay, it's not working here.
Okay, so I've shared my screen. Now I stopped screen sharing. I think this is now. I edit screen sharing again.
Do you know what I think? Okay, I suspect what's happening is, I wonder if you're flipping them on have you got two screens on your computer?
I do have two screens on my computer, and it's moved on both screens.
Okay, we can only see slide one. Try this. You know, see the list of slides on the left-hand side in PowerPoint. Just click down through them. Hang on. So we see your screen. I can see the mouse moving over the first slide. But when whatever you're doing to flick through slides, it's not working.
Okay. Well, you just got to do this again.
Yeah, that's it. Yeah, whatever you did then, that's working.
But now you see, like, the whole PowerPoint, right?
Yeah, so I can see the list of slides on the left-hand side, and I can see that. Yeah, that's working now. That's it.
But you see everything. So what I wanted to do is this. Can you see me flicking through slides now?
No.
Can you see me flicking? Which slide do you see now?
Business update.
Do you see a different slide?
No. It only seems to move when you click on the slide list on the left. Yeah, so now I can see a different slide. Yeah, now I see massive markets.
Yeah. You know what? I think we're just gonna have to do it like this, which is fine. Yeah. It's not as pretty, but I think it still.
It works. It works good.
I'll walk around, right? So I think the other thing that we should talk about now that we talked about the first quarter is the macroeconomic environment. First quarter was certainly a very interesting quarter. You had the banking system losing a few banks, some of them more high profile than others. You still had increasing interest rates. You had a lot of recession concerns. You had a massive decrease in risk appetite, and you have increasing layoffs. I think by now we have the tech sector in the U.S. has laid off more people year to date than in all of last year. So there was definitely a very interesting macroeconomic environment, and I think that has certainly added to a little bit of the confidence that we have and the pride that we have in our first quarter results, that we were able to exceed guidance and expectations and deliver a record result despite that macroeconomic headwind. It is still something that we'll have to watch, and everyone has to watch, I would say, and certainly we do that as well. And so I think it's worth mentioning here, but I think the takeaway here is very strong first quarter result, substantial expansion of the customer base, holding guidance, and sticking with the pathway to free cash flow profitability. Now, why is that the case? If you look at the right-hand side of this slide here, it shows the growth rate of Spire's annually recurring revenue that has gone from a bit over $1 million in 2017 at the end to just about $100 million 5 years later. Growing from 1 million to 100 million ARR in 5 years is a feat that very, very few SaaS companies manage to accomplish. And it generally is a clear and strong indication of a substantial pent-up market demand. Our best guess, our best assessment of that market demand is around 150, 200,000 direct potential customers across our 4 segments, maritime, aviation, weather, and space services, with a TAM, in the neighborhood of $100 billion. And that's when you get to a compound annual growth rate, or CAGR, of over 100%. If you go from 2017 when we started to 2022, and even if you include the guidance for 2023, our expectations, our guidance there, you have almost 110%, 109% compound annual growth rate. And a good portion of that is, of course, the high annual net retention rate that I mentioned. 2022 was 117%, which means that customers really, really love the products that we offer, and we are able to solve additional use cases for them as time goes on. Now, when you combine a very large TAM with this rapid growth rate, you see the improvement here on a more granular basis. This is Q1 results year over year on the revenue side, on the annually recurring revenue side, on the ARR solution customers. So we're rapidly approaching 800 customers. We have now broken definitively across the 100 million ARR barrier, and we have grown our revenue on a quarter-by-quarter basis from 18 million to over 24 million. And this kind of trajectory on the top line, as we would call it, and the customer base then translates, of course, into improving bottom line. You see here at the bottom, EBITDA, operating GAAP and non-GAAP margins, and you see the steep line that Alex had before I mentioned. And it's probably the line that I am more focused than anything else. Reaching profitability is absolutely paramount for us. It's a little bit like how I was born. I often say you can take the European. I'm from Europe, from Austria, out of Europe. Spent a long time in the US on Wall Street, but you really can't take Europe out of the European. And we Europeans, we have the strange notions. Companies are supposed to make money, and I think we are here on a very, very clear and definitive trajectory, and are quite proud that given even the still relatively small size of the company, 130 million ARR, that we see this clear trend line, this clear ability to turn EBITDA and operating and eventually free cash flow positive, because of the fundamental structure of the business. We have immense leverage in the business because we have one infrastructure that now is already fully deployed, which means that our spend to keep that data infrastructure in space alive is $10-12 million, and it's fixed, and it supports a quasi unlimited amount of revenue. And that is then reflected in the profitability. And then because it is space, and we have the data and the technology, and everything is in-house with Spire, we have this massive barriers to entry that are a bit unusual for many typical SaaS companies. We have much lower sales and marketing spend than they have. I'm certainly familiar with SaaS companies that spend 50% of their revenue on marketing because of the environment that they're in, and their barriers to entry from the technology side are not that substantial as they are for a hard tech, deep tech space company like Spire. So we can spend substantially less on our sales and marketing, which at the end of the day then all falls down to the bottom line. Talking about bottom line.
Peter, can I interrupt you there? We had a
Absolutely.
question which is relevant to this one, which is, this is a technical question, and I'm not going to pretend to understand all the question. I'm just going to read it out. From one of our more technical subscribers. So we understand you can scale up to 100,000 radio occultation profiles, and numerical weather prediction models show benefits up to that number of profiles. So what kind of capex do you need to get to that level? And what is it that drives capex? Do you build capex ahead of that demand? Do you wait for weather agencies to push that demand for you, or how do you make those decisions, and what does it mean for capex and therefore cash generation?
So there's a couple of questions in there. So our constellation currently is fully deployed. We're currently producing over 20,000 of these weather measurements. Radio occultations are weather measurements, particularly of temperature, but they also have bearing on pressure and moisture.
Yep.
The rest of the world produces substantially less than Spire produces on our own. But indeed, as the question indicates, there is definitive and substantial benefit of at least up to 100,000 profiles. And the benefit is massive in terms of, for example, knowing which pathway a hurricane will take. It can be extremely influential for extreme weather events, those events that have the greatest impact on the loss of life and property. So from a CapEx perspective of delivering those needs, which then would come from governments, I feel extremely confident in saying that we can build and launch and operate those satellites faster than those contracting happens, because we can do, we have built satellites in as little as 4 days. And from a CapEx perspective, if you look at our margin structure, I think it's quite obvious that we are very, very capable of selling our products at a very, very substantial contribution margins. Our gross margins have grown substantially year over year. They're now over 60%. And so the same thing then happens from a cash flow perspective, as if we have a need because a customer says, I want 100,000 RO profiles, that the cash flow to support that would have a very, very short return rate that is consistent with gross margins in the 60s, actually 70% range.
Okay, clear, thank you.
The last slide that I have, and I just want to show this, and no one is going to read the numbers, but I just want to say, we do have a GAAP to non-GAAP reconciliation. There's some of the numbers here that I talked about were non-GAAP numbers. You can find them online in all of our presentations. So just for completeness sake and for the happiness of the SEC, I just wanted to show this one as well. And
in our work, as you know, we just ignore all that. So we just look at cash flow, basically. So.
Yeah, no, I'm just for completeness.
You have to do it, I know. Great. The story, Peter, is fantastic. It's always been good and it's getting better. And from where we sit, the execution looks really strong. As we know, the share price has languished, and so as a shareholder myself, and many folks here will be frustrated with the share price. And so what do you think the market is missing? So you spend lots of time, probably more time than you would like to, talking to the market, talking to investors. What do you think is misunderstood about the story? And where do you think the aha moment comes from when people go, well, hang on a minute, this has a big market, real numbers, it's a company that does things that nobody else can provide, the customers are rock solid, not going away anytime soon, revenue's growing well, and cash generation is within sight, even if it's not today. When do you think the aha moment comes?
So I think there's a couple of elements that I think contributes to that, and then it's entirely possible that there are additional elements that I'm not aware of, because you talk about the frustration, and I certainly share that. I happen, just like you, to be a shareholder of the company. And as I said, I'm very, very proud of the execution that the team is delivering, and it is currently not really recognized in the market by any stretch of any imagination. I do think, though, we do have to understand the macroeconomic environment. I used to be an investor on Wall Street, and when the overall market is in a very, very bad shape, and people see their portfolio down, their risk appetites and their willingness to do something new and different, certainly decreases. Now, I think that has started to change, to be honest, because there are more and more investors that feel more and more comfortable with companies that leverage space to improve life on Earth. But just 12 months ago, it was still la-la land. It was very difficult for companies to understand how a space company works and what you make money there. And people would say, well, I don't understand space. And it's still a process for people to recognize that you don't have to understand space. I would argue that there's a whole bunch of companies that investors that buy SaaS companies that don't understand, data centers and exactly how the HVAC system works. Yeah. And I think there's a whole bunch of people, if you want to go a step further, that invest in AI and machine learning companies and I'm not sure that they would understand a neural network if one were to be presented to them. So investors are very comfortable with certain pieces of technology, but somehow space is always feeling a little bit different. That is one element where I think, that is going to change and is going to make a difference. People recognizing we are leveraging space, it's a massive competitive advantage, but the underlying business is a data and subscription business that everyone has understood now for many, many years, including the highly attractive natures of those businesses. So I think that's one element. The other element is if your portfolio is down 20%, you're just less interested in new stuff. You're just, gonna look into stuff that you have made money in the past, and you can go to that. So I think there's an adaptation to that one as well that has to happen. And I think the third element is also Spire's data, by its very definition, is about data where there is no terrestrial means. If there's no terrestrial means, humans have never seen it. And I think that humans have never seen it, it is out of sight, means for many of our markets, despite their humongous size, it is simply out of mind. I sometimes, I do this with on those investor calls, which, by the way, I really enjoy talking with public market investors, large and small. I really enjoy those conversations. But sometimes I ask them, how many ships do you think are there on the oceans? And very few people intuitively say, oh, it's at least 500,000 ships of like those massive trading ships, which is the right number. And then when I ask the next question, it's like, well, have you heard of that big company Maersk? And it's like, oh yeah, you think Maersk, that's kind of like the biggest one. It's like, yeah, it's just about the biggest shipping company there. How many of those 500,000 ships do you think Maersk owns and operates? And they say, oh, it must be like tens of thousands, right? I mean, the biggest one, right? Well, it's like 500. So the intuitive understanding of many of our markets is very, very limited. Even things like, well, how much global GDP is impacted by the weather? I don't know. I think weather is important. That's so important. It's all, maybe you get a little bit wet if you don't bring your umbrella. And if in London, you just always bring your umbrella and you're like 90% of the time correct, right? So how difficult can it be? Well, the truth is that, call it $30 trillion, a third of the global economy is impacted by the weather. And some estimates say that the loss, because we actually cannot predict the weather accurately because we do not have enough data, is like of the order of $2-3 trillion a year. It's absolutely massive, but it's not visible easily to people. So that lack of easy visible things, of easy visual things that are part of everyday people's lives is another element. I look at it though, it is by design, because if you want to do things which are easily doable with other terrestrial means so that you are in contact with them on an easier basis, it means you have a really tough competitor. You have terrestrial means that you have to compete with. And that often doesn't go so well, historically at least, when companies build space infrastructures that were trying to compete with terrestrial technology and terrestrial solutions. So we, by definition, what we do cannot be done by any terrestrial means, which almost automatically forces us to be less visual and everyday experience for the people. And that creates a bit of a communication challenge that Ben and I and others in the company, I think, are getting better every single day in bringing those interesting use cases to the table and say, what, you have a Formula One racing team that is leveraging your data to get an edge on race day. Oh, okay, that's interesting, right? Oh, you are helping a security conscious company to protect undersea cables by seeing who might be loitering around their undersea cable or undersea gas line. So we start to bring those cases and people get a little bit of a better sense to that by bringing transparency to data that traditionally has not been the case.
Yeah,
last but not least,
that makes sense.
I do think that the march to profitability is going to create a run on the ticket sales like Taylor Swift. when investors really are looking for profitable companies in large markets with highly defensible barriers to entry.
Yeah, I agree with that. If you look at the current crop of let's say 10 to 15-year-old SaaS businesses that are, went public a few years ago and are starting now to turn cash flow positive, when they cross that barrier, the stock, even in last year's bear market, the stock just explodes. MongoDB, MDB database business is a great example of this, right? So the stock languished for the longest time, and they put in 2 quarters of EBITDA profitability. The cash flow positive came along next, and the stock just went bang, and it hasn't looked back. And their growth rates held up well. And so I do think that when that moment comes, that's just a game changer. Number one, as you know, Peter, you attract a whole bunch of funds that could not invest in the stock when it's loss-making, gap loss-making. And number two, it's just a whole different story, which is I'm not just another company for whom I just get money from investors, spend it, and I hope I grow. This is actually a real functioning business now. And it is a fundamental pivot point in the stock. And you've got a whole bunch of these names approaching that. Cloudflare, we've talked about before, that they're not quite there yet, but they're probably going to get there soon. I think that's going to be a big catalyst for the stock. So I definitely agree with that. Can we talk about the CFO situation? You're swapping out CFOs. What can you tell us anything about that?
Yeah, I mean, absolutely. So first of all, if you're aware of a great CFO with the public market SaaS experience, we absolutely love to meet them. With regards to Tom has been phenomenal, right? I mean, Tom has been with the company for just about literally 50% of the life of the company. So he has seen all of the growth. He has enabled all of the growth. He has built a fantastic finance department. He has done a flawless execution on the IPO. He has done an absolutely pristine execution on the filings, even though we went out and bought an international company just the quarter after we went public. But his hard long-term is in private companies of similar size as at Spire, but in the private market rather than the public markets. And that's a personal choice. There are certainly people that prefer the private markets, and there are people that prefer the public markets. And Tom has been fantastic. He's giving us like a massive notice, like we have until end of September. So it's a very, very long lead time. And he is going to be able to spend more time in the private sector, which is what he is really, really passionate about. Okay,
so you expected to have someone in place by what, late summer or something?
Yeah, the process has been kicked off. We've had actually already conversations, and it's not something that we feel by any stretch of any imagination concerned about. We think we as a company are actually very, very attractive, because when you bring new people in, a stock that is trading below what many believe it's fair value becomes a very, very attractive currency for people that join the company and get their nice initial grant. And the process is running, and we have plenty of time. There's going to be a nice overlap between ingoing and outgoing CFO, and so I think this is a very simple and straightforward situation.
Okay, thanks a lot. We've got a member on here. Bruce, you have a question for Peter. I'm going to unmute you now. If you do the same your side and chat. Okay, you're on, Bruce.
Can you hear me?
Yeah.
Great, thanks. So Peter, a couple questions sort of going 2 different directions. The first is, can you talk about your cash position and the expected cash, how you envision cash burn and the cash that you have on hand to get you to positive free cash flow?
Yeah, absolutely. I believe in our filing we said that we ended the last quarter with over $70 million of cash. It was actually a bit more cash than what we had at the end of the year, and we feel very, very comfortable with our balance sheet position to carry us all the way through to free cash for profitability. So the ability of the company to produce its own cash. Having said that, entrepreneurs are actually not risk takers, but they are risk managers. They're risk mitigators, and one of the things that we've done from a risk mitigation perspective, just so to have not just the belt but the suspender as well, is we do have an ATM in place, and that allows us to augment the balance sheet. But overall, we feel very comfortable with our cash position. We feel very comfortable with the trajectory of our cash spend quarter over quarter, to be inside that envelope of cash on our balance sheet to carry us to free cash flow profitability.
And I believe you have a revolving credit facility as well.
That is correct. Yes, with Blue Torch, they're a fantastic partner.
And how large is it, and how much is drawn?
It is it's a $120 million facility that we drew the final $20 million in the first quarter, and so it's at this point in time it's a full $120 million that is drawn. Got it.
So essentially the 70 of cash is in some sense what has been drawn on the revolver.
That's one way to look at it. Yes.
Yeah. Right. Okay. Second question is, if you were going after a new, completely different topic away from the financials, if you're going after a new customer, can you talk about your go-to-market? How you bring what you do to someone who you perhaps have identified as having, in your view, has a use case and they're not aware of it, or does that not happen? Is everybody pretty much aware of the way you go, how valuable your service is?
So you actually identified this really, really well. Ever since a guy with the first name Christopher sailed out on a ship, I believe, called the Santa Maria, those that own the ships, I think in his case it was the Queen of Spain, wonder where the ships are and would love to know where the ships are. So the underlying value of the information has been known for hundreds and hundreds of years. What is not necessarily known is that this information is today available. So we sell directly. Our products are, higher dollar figure products, right? They are 5 to 8 figure products. And so far, we have not been able to find people that swipe the credit card for a $2 million a year subscription, but maybe we get there. So there are direct sales. We talk with our customers. We listen to them. We understand their use cases and the use cases of their customers. And the question that we very, very often get is, really? You can do that? So it is the awareness of possibilities that it's the biggest gap. And the underlying reason for that is the rapid improvement in capabilities of our technology, and I would say space technology in general, which was actually the starting point of this. I mean, if you're familiar with in the 80s and 90s, the transformation from mainframe computers to personal computers and mobile computers was driven by Moore's law, improvement of processing power, every doubling of processing power every 2 years. When I did my research in France for my large credit degree, there was a similar discovery, improvement of capabilities along any dimension, accuracy, power, processing, storage, data bandwidth, and so on and so forth, of small satellites, improving tenfold every 5 years, which is about 50% faster than Moore's law. So whenever you have such an exponential improvement of capabilities, it's hard for the general public to keep up with what is possible already today and to make it into purchasing departments of large corporations, international corporations, and governments, which is where we find some of our best customers. So
I guess the question I'm asking is, is it a matter of within Spire, you have a bunch of smart people who are saying, we can do this, and that company or that governmental entity can use this data, and you go to them and say, this thing you've been trying to do terrestrially, we can do in a heartbeat easily with our system. I mean, is that the way it works, or I'm wondering how you get to a new customer? I understand the existing customers say, wow, you did great on this, and you can do this too. That's terrific. I got that. The question is, how do you get a new customer?
Well, we know that ports benefit from our data because we have ports customers. Now there are 5,000 ports across the planet. So you just, talk to ports and says, hey, do you have the problem of like your ship spending a lot of time cruising around in front of your port looking for a berth, burning through carbon, producing oil and clogging up? Oh yeah, we have this all the time. It's really, really hard to have. Like, well, let me show you what we've done for the port of Rotterdam. Right? So you just take where you have a customer, and then you say, well, there's thousands of them which have the same problem. And then once in a while,
so to a great extent, it's rinse and repeat. You did it in one port, you demonstrate at the next port that they can do the same thing. Okay.
Yes, 100% correct. We do, of course, have people that come to us with use cases that we didn't expect. Like I mentioned earlier, that security aspect of using our data to protect valuable undersea assets. That was not a use case that we actually became aware. But a customer came to us and said, can you help with us? And now we can do the rinse and repeat to other customers.
Got it. And what portion of your business is government versus non-government?
I think it's in the filing, and I want to say it's about 50-50. I think it's last quarter was like 55-45. So it's 55 commercial, 45 government. It varies a little bit, but think of it as 50-50.
I'm going to jump in here, guys. Related questions here, Peter, is some of your contracts I know are revenue share agreements with other platforms. Is that, you announced recently, I'm going to pronounce the customer right, the CH Aviation deal, is that a revenue share deal?
We have almost 800 customers. I am not aware of every single of the economics of every single customer. Generally, the majority of our deals are simple subscriptions.
Yeah.
The vast majority of our deals are simple subscriptions. You pay us a quarterly fee in advance for our service. You consume our service, and that's it. There might be some additional kickers from a revenue share perspective, but because revenues are not determined, that does not show up in our ARR. Yeah. So our ARR number is solely subscription, quarterly, or sometimes monthly, but generally quarterly in advance.
Okay. I have two final questions from me, and then we'll turn it over to see if anyone else has any other. One again is a question I'm going to read out because I don't understand the question, but some of our members do. So regarding your customer, the NRO, can you talk at all about what they mean by, they use the phrase integrating into the overhead architecture, and how Spire will help fulfill that? Is that something you're able to comment on?
So the term overhead architecture is their infrastructure that they have over our heads. So that is anything from drones and planes to high altitude balloons, spacecraft, and anything in between. Okay. So that's kind of like overhead architecture. And the historical structure of that architecture, of that capability for the United States government was owned architecture, which means that the US government contracted that someone built it, and then they owned it, and then they operated it. Very, very similar of how they used to own and build all their reusable rockets. They were called the space shuttle, and they cost $500 million per reusable flight. Today they use something different, which is called the Falcon 9. The cost is something like $50 million for a reusable flight because it's a commercial service. The same thing they did on the imaging side. They used to have, like the big iron satellites, and now they consume a large portion of their imaging needs from commercial service providers. The same thing is starting to happen on the weather side. The same thing is starting to happen on the RF intelligence collection side, where they use subscription services from commercial companies like Spire to augment their own infrastructure that they have overhead.
That makes sense, thank you. And then I have one last question, which is a really easy one, which you'll like, which is, if you look forward 5 years, and I don't mean, business plan 5 years, but, the shape of the business 5 years, where do you think the company can be from a tech and a business standpoint? I'm not asking you for any financial forecasts here, just paint a picture for us.
Yeah, so if you think about the overall market that we operate in, right, it's $100 billion TAM. And many of those 10 elements that we see already today are actually growing very rapidly. We see two major trends and then a number of minor trends that drive the need for Spire products that are like the wind in our sails. One of them is climate change and the ever greater impact of weather on just about every business. What used to be a fanciful word 10 years ago when we started is now becoming part of everyday parlance, earnings reports and investor considerations, and that is the impact of weather on their business. And we have a huge contribution to make to help companies, communities, and governments adapt to that ever-increasing impact. So that's a big driver. The other driver, of course, is global security. You know, there's of course stuff happening in Europe. There's of course stuff happening in the South China Sea and in a whole host of other areas across the world. And providing that, I'm going to use this term now, overhead architecture to collect data on a 24/7 basis with a highly temporal resolution. Spire captures and covers with its antennas every spot on Earth at least every 15 minutes. Is going to be continued of high relevance. And then you have additional trends that support this. You know, one is of course the growth of the overall space sector. Investment there is growing in the double digits. Company creation is growing there in the high double digits. And that is again following akin to what happened in the 80s and 90s. And then you have the importance of data in general, and then the additional extraction of value from data through AI and machine learning, which makes an existing data set more and more valuable as those technologies improve in accuracy. Spire collects hundreds of millions and millions and millions of data points every single day that go into our data vault, and it's data that only we have. And so it's making it more and more valuable to use AI and machine learning to extract value out of that. So you have all of those trends that push us forward in our business model to deliver a greater and greater share of that $100 billion TAM. So if you want to think out, 3, 4, 5, 10 years, we talked about the gross margins on our last call, the 70s, which are typically for SaaS companies. We talked about the moat, which means that we have substantially less marketing and sales expense in those. And, we talked about being free cash flow positive at a range of, end of this year guidance, 130 million ARR. So a company that is cash flow positive at such a small scale, you start to get a sense of how incredibly productive from a cash flow perspective such a company can be when it is 200, 300, 500, $1 billion of annually recurring revenue.
Yeah, that's great, Peter. Thank you. And then just a housekeeping thing, the reverse split plan. So you've announced this in response to the stock going sub $1. So anyone not familiar, if your stock stays sub $1 for too long, the NYSE will ask you to leave the exchange, and so the way companies will typically deal with that is a reverse split. In other words, they reduce the number of shares outstanding and therefore increase the prevailing stock price by the same proportion. It's the opposite of a share split that people like Apple and Amazon and Tesla did in recent years. Any update that you can give us, subject to all the usual restrictions, on timing for that, anything like that?
I mean, this is literally just housekeeping, right? It's like, my 8-year-old daughter is bored with this type of arithmetic, right? They want a certain stock price. Okay, so you reduce the number of shares, you have a higher stock price. It doesn't really change anything on the business. So it's a pure math exercise. We have our annual shareholder meeting, which is middle of June. There, the proposal is for the shareholders to vote on. They will vote on we expect to approve it following the recommendation of the board. And then thereafter, if there is a need, because the stock price has not naturally risen above a stable ground that makes it sure that you stay above $1, then you do a reverse stock split. And we have received from a number of people in the investment community actually quite a positive sign, because you mentioned earlier that there are certain investors which cannot invest in certain types of companies, could be market cap, could be EBITDA, but there are also certain types of investors that says like, I can buy a $100 million market cap stock if it has a $5 share price. I can't buy a $100 million market cap a stock if it has a $1 share price.
Yeah.
That's completely, nonsensical. But we have certainly
I know funds have rules like that. Yeah, sure.
Yeah. So we have received, a quite positive feedback from certain members of the investment community that they look forward to a reverse stock split because it gives them then access to a company that they understand that they have been following, and that some of them have expressed, quite excitement to be part of the shareholder base. So it's administrative, nothing much to see there, but I think some of the investment community at least look forward to it. Because it allows them to become shareholders in the company because the stock price is above $1.
And I wonder if any benefit will obtain. You've got this Russell inclusion coming up. I wonder if any benefit will obtain from that, where at least the ETFs have to start buying some shares.
Possible, and same kind of like comment I made beforehand. There will certainly be some investors that will have an access to the company stock that they currently do not have.
Yeah. Great. Okay, folks, we just have a couple minutes left. So anyone have any final questions before Peter has to go? Hold on 1 second. Someone's got their hand up. Who's up? Jason, I'm going to unmute you. Hold on. Okay, Jason, you're on.
Hey, Peter. Yeah, big fan, obviously. I wanted to double click a little bit and nerd out on the NRO stuff a little bit more. Can you talk about some of the trade-offs from an engineering perspective on having a constellation of CubeSats, many hundred some satellites, as opposed to, say, the Hawkeye 360 model, which are larger satellites but smaller in number, and in respect to RF monitoring, geolocation, and GPS? Do you see value in having a lot, or is there value or trade-off with having a bigger satellite with more power and stuff?
So it's a classic case where bigger is not always better. There are certain limitations from a size perspective that has to do with the antenna size. So when you go to certain sizes of antennas, you have more accuracy. What that invariably means that you have much lower temporal resolution, right? So if you think of a large camera, because it's a little bit easier for some people to think about than RF, think a very large camera that has like a tiny little, almost microscopic lens on the surface of Earth. You get very high resolution. You might be able to read a license plate, but you can do this, once a month in a particular location, or you have just very limited ability to go across the globe with this very high resolution. So the trade-off generally is, when you talk about size of satellites, you talk about the resolution versus on the temporal space, like how often can you cover a certain area versus how accurate can you be. The powerful thing with RF is that there's a lot which you can do with the electronics, and so you can actually get quite relevant pieces of information if you have enough of it. Now, Spire has more spacecraft that collect data like the type of data that the NRO is looking for than all other commercial companies doing this type of collection combined, at least as far as we know. So our temporal resolution is really good. And in many instances, the limiting factor from a revenue perspective is for companies the temporal resolution. How often can you cover Taiwan? How often can you cover Ukraine per day? There will certainly be instances where if you have a larger satellite cluster or larger spacecraft, you will get better resolution. And it's, as often is the case, the combination of things that create a really valuable experience for the end customer that really move the needle on a problem like global security.
That's fantastic. Thank you. I don't want to chew up all the time, but if nobody else has one, I'll be happy to add one more.
Thanks, Jason. I think we're done. So
Fair.
Peter, thank you so much. Ben, thanks so much for organizing this. This has been a really terrific session. I will repeat our own house view on the stock, which is, the stock, we're bullish on the stock. It doesn't need me to say that it's a risky investment from the outside perspective. It's a small cap, all of those things, and no one will put their life savings into any high beta stock if they are concerned about risk at all. And this is certainly a high beta stock, but the fundamentals of the company are strong and strengthening. The moat around the business is very strong. I've been investing in technology companies a long time, and one can always get these things wrong, but everything about the fundamentals of the business looks just like it should at this stage. High growth, margins improving, sufficient cash to fund the runway, all of those things. And so as a firm, we remain very bullish on the stock. It's going to be a long haul probably to really realize its potential, but often the best stories are. And personally, I'm a long haul shareholder for this. It's a retirement account holding for me, and I continue to expect great things over time from the stock. So thanks everyone for showing up today. Everyone who submitted questions and asked questions live, that's fantastic. And again, Peter, Ben, thanks so much for coming to do this with us. We'll circulate the video thereafter, and wish you, of course, all the best for the future. Thanks again.
My pleasure. Thanks so much for organizing this. Thanks for the questions that came in. I love those conversations, so I hope to see you at a conference or webinar in the near future. And with that, I wish you all a great evening.
Great. Thanks again, Peter. See you soon.